Hey, welcome back everyone. It is time for another red hot covered call video. Hey look, today we're going to talk about a covered call for which I made money, and we're going to talk about a cash secured put for which I lost money. But in both cases, I bought the option back. So today you're really going to get a look into my world as to how I handle trades once they get close to expiration. In the case of the covered call, Win had rocketed past my strike price and I had to make a decision. In the cash secured put with Win again, it went negative on me. I made a decision, lost money, but hey look, you benefit because I'm going to show you the trades, we're going to talk about them, and I hope you learn something. Hey look, before we get going, if you like what we're doing here at the channel, subscribe to the channel. And hey look, if you like this video today, bang that like button. It truly does let me know you like what I'm doing. And hey look, before I get going, because I may forget this, the Facebook page is up. If you go to Facebook and you search CTP Dashboard, go ahead and like that page. Be a part of the off YouTube discussion. And while you're there, if you haven't seen the spreadsheets or the CTP Dashboard, download them. They're for free, and I have videos to up your game. Now let's talk about two trades. One of the trades, it's funny because I know you cats are watching, because in my last couple videos, I've showed you my total tracker income for 2018. And notice all of the green trades right there? Well, some of you cats said, hey look, recently you had a big old fat red one. Can you talk about that? Well, that's what we're going to talk about. That's my cash secured put for which I lost money on Win. And we're going to get to that trade here in a minute. But what I do want to show you, I want to show you this for inspiration and motivation. You know, I talk to you cats all the time about picking that great stock, one that you feel comfortable with, and you make trades, right? You do it time and time again. I love finding that great basket of stocks, and I use them time and time again. Now, Microsoft is one of those for me. And as you can see, this is why I created my spreadsheets, because Jerry told me, look, if you're going to do this, you got to keep the numbers in front of you. And when you run this game week after week after week, you have to realize when you're profitable and when you're not, when you write that next covered call. And in the case of Microsoft, I might have to add some rows on my spreadsheet because I'm about to run out. Look at that. I haven't written a cover call on Microsoft since 2 weeks ago, but I'm telling you what, Microsoft is rallying now to above 105x. And I think I'm going to write a Friday cover call, one deviation out, look to make more money. And hey, if my shares are taken away, look at that cost basis, $88. I am making money with Microsoft and I love it. Now let's get over to the Win trade, because I know I can go long, so I do apologize if this video goes long. Let's talk about the cash secured put for which I lost money. So let me set this up. So if you've been watching my videos, you know I love to cherry pick some cash secured put money. And what I do is this. Some of my favorite stocks like Win and Whirlpool and Microsoft, well, when they have a bad day, when they fall, let's say 5 or 6%, they start to fall towards support. I'm a firm believer that Wall Street will buy up the great companies when they stumble and fall. Now, it might take a couple weeks, but ultimately they're going to buy them up. And in this case, Win had fallen from 200. And as Win was falling, it got down to about 182x. And see that support line right there? I'm watching that. Now, Win's trading at about 182x. And I'm thinking, look, this is a great opportunity to write a 172.50 cash secured put, pick up a quick $1.70. Never expected to be assigned the shares. And in this case, as Win was falling, I'm feeling like I made the wrong decision. Win is falling. I don't actually know where the bottom is on this. I mean, come on, it's fallen from 200. So this thing might not have a bottom. And sure enough, as we get to expiration, Win is trading below 172.50. Now, remember, I got paid $1.70 for this option. And as Win falls from 182 to 172, the option is now getting more pricey. Meaning, if I'm going to buy this option back and take the obligation off the board, right? Taking the obligation of me buying somebody's shares at 172.50, I'm going to have to pay more money. And when I was doing the math, as we were getting close to expiration, that option was trading for $251, and I had to make a decision. Did I want to own Win shares at 172.50 with the stock probably trading around 167, or buy back the option, add to my cost basis, and wash my hands of a bad trade? Well, in this case, when I ran the numbers, that's exactly what I decided to do. And this is how the numbers worked out. So Win had fallen below 172.50. It's now trading near 166. That's over $5 I'm going to have to take a hit on immediately, right? Because I'm going to be assigned the shares at 172.50. The $1.70 premium I've already spent, so I'm not putting that towards my cost basis, right? That's how we play this game. So I'm going to be stuck holding the bag come Monday morning. Well, when I do the math, if I want to wash my hands of this trade and take the L, this is what I'm going to have to do. I'm going to have to buy that option back for $2.51. And what am I left with? Well, I'm left with a debit of $2.51. I got paid $1.70. So I am going to have to absorb the difference. And that's about 80 cents. That is the real loss on this trade. And as you can see, win actually continued to fall all the way down to 152x. So in this case, this is actually going to be a win for me, but it is a cash secured put for which I lost money, and I wanted to talk to you about it. The important thing to take away from this trade is this. We're not locked into this trade. Some people actually think once they write a covered call or sell a cash secured put, they have to go to expiration, and basically wherever it lays, it lays. That's not true. This is where your exit strategies come in, and you have to manage the trade. And in this case, I did not want to get stuck. So in this case, I take the loss, but I'm going to look at it as a good trade because win ended up falling to 152x. Man, I'd have been down 20 bills. Let's talk about that covered call right for which I made money, bought the option back, and made even more money. If you remember my last video, I talked about how I bought win at 162x and I sold a 165 covered call for a very short window. It was actually like one day. Win rallied to 167. I had my shares taken away. And when we wake up that Monday morning, win falls to 152. Literally, the call holder left holding the bag. Well, that's not the case for me. I got paid 165 plus the premium and I'm ready to go. So come Monday morning, when win has fallen off the table to 152x, I decide to buy some shares on that Tuesday, 152.99, and I wrote a that Friday covered call 155. Now, I got paid 90 cents for that, and I'm feeling like that's a great short-term play because I think win's going to bounce. I think win's going to bounce right off of that support line. Wall Street's going to run them back up. I'm going to make some quick money. Well, this is what happens here. As we get into that Friday, I'm talking to Jerry. I'm talking to some trusted friends about win. We're just sitting there thinking, look, the analysts are coming out saying, look, this recent fall in the stock is not justified. The stock's going to go higher. So I'm sitting there thinking, look, I may have bought at the bottom. So as we get into Friday and the stock's trading at 156.80, man, I'm feeling like I gave away my shares cheap. So here's the deal. As we get close to expiration, I have a gut feeling and I'm going to break a golden rule. Hey, look, if you've been watching my videos, you know I have a golden rule. If I buy an option back, adding substantially to my cost basis, I'm going to sell that stock immediately because I don't want to be left holding the risk of adding to my cost basis. So in this case, remember, I only get paid $155. So with the stock trading at 156.80, I'm going to add cost basis. So as we get into expiration, what do? I plug in the numbers, and as win is trading, the option is trading at about 182, and the real money in the stock is at 181. So just a quick rehash on options. Remember, options have real money and time value. Right now, win is trading at 156.81. The option is trading for 182. So right now, there is $1.81 of real money in the option plus 1 penny of time value. So I decided to buy that back, add to my cost basis, and we were going to hold the stock into the weekend. And that's what I did. So the numbers there work out. I buy back the option for 182. I got paid 90 cents. So we're going to scratch 90 cents from that 182 I paid. That's my true cost basis. And now I own a stock that's trading at 156.82. And now I entered the hope and pray game. And I don't like doing that. I just had a gut feeling on win and I'm going to stick with it. And sure enough, when we wake up Monday morning, win had rocketed to 160. And then on Tuesday, it rockets to 165. I go from making a very clean $850 if my shares are taken away at 155 to turning that into stock appreciation of close to $3,000. Hey, look, I know that $3,000 is pie in the sky and win could fall tomorrow, but I just want to show you we do not have to be locked in. And in this case, I used an exit strategy. I had a plan. I executed the plan. Now, look, I don't know if you'd have done those trades, but that's what I did. And I think by me showing them to you, talking to you about them, I think you learned something. And look, if you're new to my channel, this is exactly what I do. I talk about covered call theory and strategy and all that other stuff. I think most people really get value out of this channel because I do the trade, we talk about them, and then you learn something. something. And I think that adds value to everybody's game, making it flow like water. Look, if you like this video, I would love it if you bang that like button because it lets me know you like what I'm doing. This is a great video to share with your friends because a lot of people actually say to me, once I enter a covered call trade, I feel like my hands are tied. That's not the case at all. We can use exit strategies to make more money or bail us out if we made a bad decision. Until next time, I hope all your covered calls are profitable.
All I see is signs, all I see is dollar signs.